Alright, welcome back ladies and gents. Modern Day Merchant here, and today's topic is, do candlestick patterns actually work? And the short form answer to that question is they do not, but do stick around for the whole video to figure out together why that is. Alright, so if you've been looking to educate yourself on trading the forex markets or stocks or crypto and anything else, or if you are a trader, you've been a trader for a while, you've likely come across these types of patterns. Reversal patterns, continuation patterns, all kinds of patterns that supposedly are good to predict the future movement of the price, right? And a lot of gurus and a lot of coaches, especially in the YouTube space, not only, they tout these patterns as the only thing you need to master and to remember in order to become a professional trader, a profitable trader. Now the trick is that these coaches, they don't actually make money from trading with these patterns. They actually make money from teaching you how to use them to make money. The best way to make money is basically to teach other people how to make money. So do they actually work? In my experience, they do not work, and I'll tell you the reasons why. Okay. So first we need to look at, why does the market move up and down this way? Let me make this at 4 hours so it's a little bit more clear. If we could. There we go. Okay. So what influences these price movements? And we've discussed a little bit in previous videos, but the short version of it is that people buy, of course, when people buy or traders enter the market, the price moves up. And when they sell their position, the price moves down, right? Because there's less demand for that particular currency. Now, there's two types of players in the market. And those types of players are institutional players, namely banks, hedge funds, and so on. And then there are, so let me just edit this one. There are retail traders, which is basically you and I. Now, the problem with this is that only one type of player of these two has the power to actually influence the market. These guys do, these banks, and these guys don't. Namely, you and I do not have the power to influence the price movement. Why is that? Because we simply don't have enough money. Even if you're a mid-range or high-range retail trader, you could trade $100,000, whatever. It's still not enough in the grand scheme of things. It's not enough to actually influence the movement of the price. These guys, however, when they enter the market or when they exit the market, when they buy and sell, they have so much capital that they literally push the price up and down. Okay? Okay. So now that we know who influences the price, we have to look at, do they look at candlestick patterns to decide where to enter or where to exit? Candlestick patterns such as, and I'll give you an example here. Let's see, I kind of highlighted it earlier, but it's so small I can't see it. Okay, there we go. So if we have, going to 1 hour chart, we have, where's my, okay, got out of my area of interest. There we go. So we have, for example, what they call a morning star here, looking quite good. You can see it in right here. It's supposed to be a bullish pattern, right? Morning star, pretty much looking almost the same. Did the price go up? Yeah, it went up for how many pips? 20 pips roughly, and then it continued down. The price does whatever it wants. It doesn't really rely on this pattern. Let's see another one. This being a shooting star, I believe. Let's confirm. Yes, it's supposed to be a bearish signal. Does it work? Well, as you can see, not really. The price actually went up immediately after the signal. Okay. Why does this happen? Why doesn't it work? Well, we have to go back to our market players here and look at what do these players actually look for, these institutional players, hedge funds, banks, and so on. Sorry, this keeps losing alignment here. So it's probably going to keep doing it as I keep going back and forth. Okay, so what they're looking for, these institutional banks, because they need to enter such big positions, and because we are in a market, what needs to happen for these guys? Let's say they want to buy here, for example, right? They want to enter a buy position here at this particular level, and they want to liquidate their position here, let's say, right? So they buy here, they sell here, they book the profit of 230 pips, right? Now, in order for them to be able to do that, if they want to buy their huge positions here, somebody else needs to be on the other side of the market to sell that to them, right? Conversely, when they want to liquidate their buy option, they want to sell it, somebody needs to buy it off of them, right? Now there's a problem. They have such big positions, these guys, that they need to find liquidity. They cannot just put their position wherever they want. They're looking for liquidity, and that's where the phenomenon of sometimes people complain about stop loss hunting. So you put up, as a retail trader, you put a, let's say, a buy position here. You put a buy position here, but the price goes down. So let's say you put a buy position. Let's color this into green, and then let's zoom in a bit so it's more clear. You put a buy position, and then you put a stop loss somewhere here. Let's represent that with the red, right? The price, instead of going up, it first goes down, it takes your stop loss, it closes your position, and then moves up. Why does this happen? Well, because these major players, they need liquidity. They need somebody on the other side of the trade to sell them this amount of euro against the US dollar for their position to be opened. Okay, so that's what they're looking for. They're not looking for these particular patterns or candlestick patterns and so on. They're looking for where there's somebody else on the other side of the market for their positions to be entered or liquidated, depending on the case. Okay, so that's what it is. The only people looking at these patterns are actually you and I, these traders. And whenever we're starting to trade, we look at, okay, what's the first thing we should look at? And we probably will come across these things, and we try to learn them and we try to memorize them, but they actually don't work, because that's not what moves the market. What moves the market is these big players, and what they are looking for is places on the chart, price points basically, where they can enter and exit their positions. All right, hopefully this was clear enough. Let me know your questions in the comments. Thank you for watching, and I'll see you in the next one.